24th March 2023, Friday, guys. This is going to be the most powerful, most important video that you really need to watch because it's so mind-bending that the context itself, the chart really sent a lot of cold chill down me, all right? 1973, 1987, 2008, and 2023. Any relevant? Well, there's no pattern here, right? There are. And I want to tell you this, guys. If things really get out of hand, things can go very wrong. And to me itself, right, Bank of America and Pacific Western Bank, these two banks are one of the few banks that I'm watching it very closely. In fact, a sixth bank to introduce to you. And I'll tell you that be very careful. Things may get really scary. Let's go. Now, once again, guys, we are going to have the Spin the Wheel Lunch with Cal tomorrow. Okay. So if you have not sent the command, well, your last chance today, okay? Your last chance today so that you can enjoy this lunch date with me on next Wednesday on the 29th of March, okay? It's at Paragon Shopping Center. And of course, remember this, guys, you need to put relevance content, okay? If you put relevant comment, I will definitely invite you for this itself. This is going to be very important, yeah? You need to do that. But if you actually come in and actually post something that's irrelevant like this, Tom, okay, then I can't help you. There will be no. So those people who have a thumb up and a love shape, a heart, will get a chance, okay? So that is very important, okay? All right, cool. Now, once again, risk assessment, very important, guys. This is going to be very important because you need to make sure you know your risk well. And thank you, Ames, for the kind sponsorship. Okay, so what is happening right now? Why am I concerned? Well, the thing is this, you must remember that you must quickly put a command inside itself. If you don't put in, I'm so sorry, I can't bring you in, yeah? And this is a very nice place itself, and the good food is there. I think I missed my PowerPoint slide when topsy-turvy, so that's why I came in late. Apologies on that, but never mind. Let's move on, okay? So don't miss it. If you put something like this side, I won't give you the command, I won't give you anything. There'll be no love. That means you couldn't get a chance for the lunch date, okay? All right, let's go. Okay, so let's recap what happened last night. The Dow Jones basically up by 75 points. The Nasdaq up by 162, S&P up by 11. So isn't it good? Well, it is good. But if you know what actually happened throughout the whole day, then you may have to think twice. Now, Microsoft, Google, Intel all went up. Very good, right? The technology all goes up. But wait a minute. Didn't we just had a rate hike? Yes, apparently the market is still believing that there will be rate cuts coming in. In fact, they are forcing Fed to admit that there will be rate cuts coming in by the end of the year itself. That's why a lot of companies now, the technology companies, are being bought up by a lot of funds. But I really express my concern right now. Why is that so? Because look at NVIDIA. It's up again. It's now $671 billion worth. This company was only $350 billion worth just last year. And it's basically one time. Now, we all know that, we know that it's all the AI stuff is coming in and everybody's betting on it. But I felt that this is the very wrong time to do into this right now. So I'm very concerned on this. I don't think you'll crash, but I think that this company is may have a problem later on. So in my opinion itself, be careful. Now, why is it volatile? Let's take a look here. Now, first of all, you must understand the NASDAQ, okay? The NASDAQ was up, right? But the Dow Jones was up even more. As a matter of fact, the Dow Jones was up by 481 points at one stage before pulling back to 74 points. That means that the market lost 400 points during the day itself. But that's not the end, and there's more to go, okay? So the thing is this, we all know that the Dow Jones itself is very related to the general market. And if the Dow is pulling back down, don't you find it very scary? Now, of course, you can argue that now the Microsoft, the Nvidia, Apple are doing well, so it should be good. Who cares, all right? Well, just to let you know, guys, if the bank starts to really tighten up, the financial stocks itself, right, will get hit, which is happening right now. The next company or the next sector will be technology because they are relying a lot of heavy leveraging, borrowing credit from the bank. And when the bank pull the handbrake, this company will get it. But of course, again, the market is concentrating around buying that the fact that the Federal Reserve will cut rate. Well, they can cut rate, but they can still tighten at the same time. Why? That means that the rate can come down, but the banks doesn't want to borrow or the bank want to pull back the funds is really possible. So that's why now the SPDR S&P Regional Banking ETF, KRE, is losing 2.7%. Now, don't note, Just a couple of days ago, it recovered. Everybody think like, oh, the coast is clear. But yesterday, it just dropped another 2.78%. So the thing is this right now, everybody is just debating whether are we going to have a rate cut, right? So to me, it's how you must understand what's happening. Look at the chart here. Let's take a look, right? I annotate this for you guys. The Dow Jones was here at the highest point. It went down to this point, and it was down by 600 points from the highest to the lowest point before it rebounded. The question is this: why would you be selling something when you are expecting the rate cut to happen? So to me, it's a question mark here as well. Somewhere it's not correct. I just feel very wrong. This doesn't make sense. Maybe you can leave some comment and let me know what do you think, right? Something is just doesn't make sense at all. And now I'll show you more detail. The central bank, Swiss National Bank, came in to hike by 50 basis points. Now, Credit Suisse is having problem, but why? Because the Federal Reserve increased by 25 basis points. So everybody must go up together. If not, it's so that if let's say Federal Reserve do actually cut interest rate, it will create a big, massive problem for the rest of the banks. So they have to follow. So now the thing is this: we all know that Credit Suisse is in turmoil. We know that UBS is being forced to go and take care of them. But the question is this, all right, why is it happening? And in fact, BOE, Bank of England, also did that. And it's because of inflation surprises. So all these things tells me that, right, they are all preparing for a rate cut. Yes, indeed, because they had to bring it up to cut it later. But why are they doing that? Because they know that, probably know that something really bad is going to happen very, very soon. And that is my first concern. So now, of course, I'm very confused with Yellen. She says that the Treasury is ready to take additional action if warranted to stabilize the banks. But wait a minute, Yellen, didn't you just say that, right? The blanket insurance of bank deposit is not being discussed. And in fact, yourself, you said that you're not even considering for all the US deposit. Now, what the... Can you just make up your mind, which side do you want to stand? To me itself, she's very disoriented. To me itself, right, I know what she's trying to do. She's trying to tell the truth, but she knows that every time she tells the truth, she had to pull back because someone will tell her, "Oi, what are you doing?" That's how I feel it. So this is crazy, guys. Look at the Fed balance sheet right now. It have increased another $93 billion just this week. Now that means in just 2 weeks, the Federal Reserve balance sheet has increased by, let me show you again, it basically increased by, wow, $400 billion. Gosh, guys, we took how long? We took months and months and months to basically reduce this balance sheet, all right, to March. Suddenly, within just 2 weeks, all right, the months, about how many months, let me say, 6 months, yeah? 6 months. 6 months of the Federal Reserve to take 6 months to bring it down, all right? And now within 2 weeks, it went back up again. So obviously itself, right? Are you telling me right now that what will happen next? Of course, there be inflation will run wild. Is that true? Definitely. What do you expect? Because we have seen it right in our face. So the thing is this right now, you can see the liabilities, the capital are really, really shooting up, and the S&P 500 route. Now, I want you to pay close attention here. This is going to be very, very important. Okay. So, of course, you will argue, guys, look, the Federal Reserve pumps money. The stock market goes up, right? The Federal Reserve take out money, the stock market goes down. Okay. So, what's the big deal, right? So, everything's okay. But there's a problem, guys. Take a look. Now, the thing is this, the balance sheet liability is going up, right? But the stock market is not really following through. So, this is the problem. This is the real problem. That means that it's not giving the same support. And this is getting very scary right now, all right? Because if you look at it right now on this thing here, the true financial condition, all right, apparently we are now at a very ridiculous level that we are not seen for a longest of time. The last time we saw it was in 1980 to 1983, where we have recession. And of course, we have another time we've seen it before that, it's 1973, and it ended as recession. So this is the true financial condition index that basically is even better than other indicator. So putting all ahead itself, right, this is going to be very, very bad signal to the market, who is still thinking that there's no recession, or even there is, it could be mild. I don't think so, guys. You need to be very concerned by this. So there are 6 banks that I'm pretty worried, okay? I think there's something wrong in PowerPoint. Just give me a moment, because it's stacked over one another, I think. Okay, just give me a moment. All right. So first of all, this company called PacWest Bangkok. All right. This company, as we can see very clearly, why am I concerned right now? This company share price just jumped down. Okay, literally jumped down from $28, basically hit $6. Oh my God. And then now it's back to $9 and the volume is declining. Now, this is not a good sign because the bailout coming out itself, you shouldn't have such a reaction. So if this is going to go down further, I'm telling you guys, it may go down to as low as $4. And again, this will send waves in the problem for everyone. Next company, take a look. Wells Fargo, right? This company, you can take a look very clear that this company itself, right, is having big issue, okay? Now, this company has lost all the way from $27 and dropped all the way to $36. And apparently this is the lowest point for the long while. So to me, it's alright, this company can really go down to $34 to $33, and that can send even more problem down the road. Now, I think that there's some PowerPoint issue on my side, so I can just peel it off for you so one by one. Yeah, okay. I peel this guy. Okay, PacWest, you have done that. Okay, here we go. Bank of America. Now, this company, I'm pretty concerned because why? Take a look at this. This is one major bank, right? And definitely, so this company was $334 just in March. Now it's at $26. It dropped a fair bit, and the way is coming down. Yesterday is even scarier with huge volume coming in. So this is another concerning bank that I believe that things may get really wild. And if this is one bank that to be going down, guys, this is going to be very scary, guys. Now, of course, First Republic, I got this feeling that this company will not do well. In fact, right, we may see it doing worse than it. If there is a counter offer right now, they're looking at $5. Think about this. What happened when it was being offered for SVB, right? Same thing here. I think that this company, as First Republic, can actually see $5, and it is really possible. So that is again another real concern right now for me on this counter. And our Credit Suisse of UBS, UBS itself, you can see that it recovers because of the government coming in to save the day for them. But now look at it, the volume is declining, the share price is coming down, and I rapidly believe that this is going to come down fast. And once we hit $17, I can tell you this, the shareholders, everyone will jump, everyone will complain, and something bad may actually happen. And all these concerns because of UBS. Sorry, this is the UBS problem. Okay, wait a minute. There's something here itself. Okay, let's take this away. Oops. Okay, I'm done. Okay, let me just get here. That was Credit Suisse, yeah? Okay, let me have this problem here. Okay, just give me a moment. All right, I'm having this little problem here on my screen right now. Okay, wait a minute. Okay, okay, moment, yeah? Okay, I think there's something wrong on my side. Doesn't matter, but one thing is that, oops, okay, I want to bring you to this one, Credit Suisse. Just give me a moment, guys. Something wrong with my PowerPoint. Okay, sometimes this has thing happen, yeah? Okay, let me just bring back to you last slide on Credit Suisse. Just give me a moment. Trying to get my thing up. Oh gosh. Okay, let me see what's happening right now. Okay. Okay, I think there's some problem here. Never mind. Credit Suisse is now trading at 87 cents, and people have been buying into this. I believe that Credit Suisse can go down lower to even as low as 50 cents, guys. So be very careful. So if all this thing happening right now, what will go? How high gold will go? Well, apparently now some people are saying it go to 2,600. Now, guys, every time we have crisis, the people will say, "Oh, we go this, we go that." All this BS stuff. To me, it's all right. Sorry, I don't think we'll go see 2,600. I don't think so. I'll be honest with you, I don't think so. But 2,218 thereabout, I believe can actually happen. Okay, this can actually happen. Okay, guys. So to me, it's all right. This can actually happen because that I have been calling for gold for buying, and the last time we saw was 2074.75, and that was back in 2020, and that was because the US Federal Reserve print money to save the day. So obviously, it's all right now they're printing money, and they can print more money if they cut interest rate. This will send gold all the way to a very high price. Okay, it can go at a very high price. So that's why I believe that we'll see that happening. And of course, within my indicator right now, you can see it's pretty impressive. Take a look, guys. This is my KFC technical indicator. If the market doesn't allow you to go above it, it will actually stay resistant. But once it breaks, it will become a very incredible support. Now, this KFC is the automated software that I created. It basically predicts the market. And of course, right now you can see for this year itself, when it couldn't stay up, bang, it came down, right? But recently, the day that it shot up was the day it crossed above my KFC level, and now where we are. So I believe that in the short term, we'll see 2022 first, then maybe be a pullback, but eventually 2018 should be the next level. So guys, this is my view on gold. So that is the thing here. Let's see whether I be right. Now, the thing is this, remember, I was telling you guys that because there's some artificial hand that's holding the market, right? Look at this one here. The bank shares are down by 20% on average on the index, but yet the S&P is hardly budging, right? Why is that so? Because they bought into the technology company to balance up. But the thing is why are you doing that? Because they need to contain the market so that there will be no spread of this fear and panic in the market. But don't you notice that once you start to do such a thing as well, right, it will only leave more problem later on. And I can tell you this, guys, is starting. Now, take a look at this S&P chart right now. This is going to be very, very insane. So please, guys, pay attention to details. This is going to be crazy. Now, this is A, this is B, and this is C, and this is D. Okay, so we saw it. And the market tried to recover above it, failed, and pull back. But what's scary is the way it closed. So, guys, look at it. This is the moving average. The one in blue is the MA 200. Which is the one that everybody uses as a form of guidance. And look at it, the way it stopped at the MA 200 and rebound. Now, this is clear because you can see the day before, the market did that also by closing just marginally above it. Now, this is not a sign of support, it's a sign of manipulation. And of course, when you manipulate in this manner, it's just a matter of time that something will break, okay? Something will break. So of course, the argument is some of you guys say, okay, you go back to 4,120. Okay, I'm not saying that you're wrong, but there's another way. You come down to here, 3,800. So what do you think, guys? Which level do you think the market will go? 4,120 or 3,800? Please leave a comment. I would like to hear from you, okay? This is going to be very, very crucial and very important for all of us because now take a look at this chart here, guys. This is from a YouTuber. I actually biased into it, but of course, I'm not going to just jump in and say that, oh, he's correct or he will be correct. Now, the thing is this, I always believe that now we're having a bull trap. Now, what's a bull trap? A bull trap is where you trap the bulls who believe that you'll go up. But this usually happen in a bear market, whereby in a bear market, you have market coming down, going up, coming down, going up, right? So this area is what we call the bull trap, okay? So the thing is this, guys, the thing is this. I believe that we are going to see a meltdown soon if a certain technical point get triggered. Now, it's not immediate. I think something must happen first, and I'll show you in detail. But remember, the years are 1973 to 74, 2008 to 2009, and now it's 2022 to 2023. Okay, so why am I going to bring in this itself, right? Because I actually went deep and find out more stuff for all of you. I hope you like this, okay? Now, take a look. This is the chart back in 2008, okay? Do it slowly with you. Okay, so the thing is this, from the highest point to the lowest point, interestingly, it was a minus 20%. Now, we all know that 20% is a bad territorial mark, okay? And the market very fast immediately came in to support and bring it back all the way up to that moving average MA 200 and MA 150. And you notice that the moment the market tried to stay above MA 200, it fell. Gosh, that's a problem. All right, that's a problem. And then after that, the market crashed down all the way to the 20% mark, tried to rebound again. Then what happened? Bang, that's what happened later on. Okay, so you got an idea now. Okay, so it's moving average, the 20% mark, and how it rejected at MA and how it pulled back. Okay, got an idea now for 2008? Okay, let's go to 2000 and 1973. All right, this is going to be really crazy, guys. Now, this is what happened back in 1973. Yes, I went all the way back for you. So this is the highest point, okay? And this is the lowest point in a way that is near the 20th% mark. It's for minus 18. And again, once the market hit down there about minus 20 level, they pump it up. And then we see the similar pattern. This time around, they actually stay above the MA 200 for quite a while. But once it get rejected right here, can you see here at this point? Bang, the market came down. And after that, it went even lower. Now that's back in 1973. Okay. So we have 2008, we have 1973. So what's about 2023? Let's take a look, guys. This is what's happening now recently in 2002, 2022, 2023, right? The market highest point is here. The 20% mark is somewhere here. So again, you can see the market came in and supported it and brought it up again, and incredible, this happened. Okay, Cal, it happened, right? But the market did came down, so that means it's over, right? No, guys, take a look. This is the 20th% mark, and you can see right now the market is actually holding the 20th% mark really, on its own. And the thing is this, look at it right now. The market now is holding this MA200 very closely, which is the same rejection why the market came down. So if the market actually stays above the MA200, yes, indeed, the market may actually go back up again. But if the market actually goes down, guys, this can be catastrophic. And that is why I'm saying that, right? There's something building up. And the more they try to make things happen by holding it, it's going to get worse. So I did a check on this thing, and I take a look here right now. The RSI is definitely not near the end point yet. There is still room for the RSI to drop. So based on this right now, I take this opportunity to X and Y, the recent high and the low as X and Y, and I duplicate it and I put it back to here as X1. And I when I put it as Y1, you can see that the market can actually goes down to 3,200 level. And that's something that what Mike Wilson say from Morgan Stanley. And the thing is this, okay, if we look further, right, we are now at this juncture down by minus 27%. So the thing is, where we are right now to 3,200, that dropped by 700 points, which means that we're going to drop another 20%. It is possible. Why not? It's all possible. Now, the last time we see all the technical level, whether it's a double bottom or triple top, all these numbers are there, 33.88 or 32.26. All these levels are levels that the market can go, but I'm still saying that, right, we may see 3,300 very soon in the near term. So guys, this is my personal view. If really things happen, this can go really, really well. Okay, this is something that you will want to keep this as a form of guidance. Of course, nothing's 100%. Why not? Just take notes of this, okay? Because I'm telling you now something very, very scary. Because we all saw the 2%, the 2-year yield basically dropped from 5 dropped to 4 in a couple of days. And the thing is this. Then it tried to rebound, but it failed. It came back down again. Now, something you must understand. The last time we see something like this, whereby the market, the yield dropped such a fast speed itself, right? It only last happened in 1987. And what was that year? That year is where the Wall Street crashed. Now, I'm not saying that the market will crash, but definitely, right, this is something that we've not seen since then. And of course, if this continue, this get worse, because the nearest to it itself was back in 2001. That was during the 9/11 incident. And even when that happened, the maximum it dropped was 68 basis points, not 100. So again and again, this tells me that something is just very wrong with the US economy right now. And if you don't be careful, you don't take precaution note, right? You'll be surprised. And of course, today is Friday. We really hope things goes well, but I never like to see market reversing from the top, because usually, right, it will have a follow-through effect on Friday and even Monday if things really get bad, or some companies say, you know what, I just have to give up. All this is coming, guys. So guys, watch my technical side. I'll see you later. This is Cal signing off. Hope you enjoyed this video. Leave a comment. Bye-bye.